The irony of me doing this video while I'm sick is kind of funny. Hey guys, Elevance Health had a technical breakout today, and this is one of my top stock picks for 2026. So I wanted to get a quick video out, giving you a quick version of my thesis for the stock and also taking a look at the chart. This is not financial advice as always, so always do your own due diligence. And this is not meant to be a deep dive into the company. So if you want a video where I look at this in more detail, let me know down in the comments. Let's start by taking a look at the chart. We have as I mentioned, technical breakout. This is on the weekly chart. You can see we're now above the 50-week moving average. If we look at the daily chart, and I'll take these fib retracement bands away here. You can see on the daily chart, we're now above the 200-day moving average. We've closed above the 200-day moving average for, it looks like 2 or 3 days here. We've taken out these prior highs. Now we have a very bullish looking breakout. This is exciting to me because this was a stock that was down a lot in 2025, and I was buying it last year with the idea of a recovery happening in the future. There's several reasons why the stock was down last year. They had guidance cuts that led the market to not really trust what was happening with the stock necessarily, especially with some other headwinds that this sector was facing. One of the biggest factors was also rising medical costs. They essentially priced their plans in such a way where they were paying out more than they thought they were going to have to, the way that the plans were priced. This higher utilization of health insurance plans squeezed their profit margins. You also saw Medicaid redeterminations in terms of who was eligible happening, which led to membership loss and Elevance Health having a smaller, more expensive patient pool. You had a exodus of members, and some of those that were left being some of the sicker members of the population. Elevance also lost a lawsuit with the U.S. Centers for Medicare and Medicaid Services that resulted in a hit to projected bonuses that they would receive. The way this works, this is an article from Reuters from back in August about them losing this lawsuit. And essentially, the U.S. Centers for Medicare and Medicaid Services, which is a part of Health and Human Services, issues star ratings for the plans from 1 to 5 stars to help beneficiaries choose among them. Plans with higher star ratings receive higher payments from the government if they keep costs below certain targets. Those bonus payments can be worth hundreds of millions or billions of dollars. Elevance had said the agency's calculations for 2025 caused at least one of its contracts to just miss being rated at the next higher tier, likely costing the company at least $375 million in bonus and other payments. In terms of 2026 Medicare Advantage star ratings, though, you're starting to see some improvement here for Elevance. Healthcare Dive highlights that Elevance increased the share of its MA members in 4-star and above contracts to about 53% after a key contract improved from 3.5-star to 4-star. So seeing some improvement here already, not to get too much into the bull case yet, but it is related to this, so I just wanted to point that out. And finally, they were removed from at least a couple of the Russell indices, and so whenever this happens, if you're removed from an index, that can cause some forced selling pressure as those funds remove the stock from the whatever the product is that tracks that index that they sell. These are all things that led to Elevance Health having their stock decline, as well as pressure for the industry overall over the 2025 year. But I think that in the longer term, even really not that far out, this is a stock that could recover because I think they have incredible pricing power. Yes, they have to negotiate with hospitals and whatnot, but Anthem is not going anywhere. At the end of the day, these are companies that have incredible pricing power to price their plans in a way that's going to get them the results that they want. It can take some time. These companies might have years where they have challenges like plans that were mispriced or the government having policy that doesn't benefit them as much. But at the end of the day, I think the biggest threat to companies like this is actually the government. And it's, like a single payer healthcare system, but I don't think that's coming anytime soon. So I think if you're looking at this with a mindset of more than 1 quarter out, especially with the technical breakout we're seeing, I think this presents an excellent opportunity. And if we look here with the yearly earnings forecast, fiscal year ending December 25, which they're about to report for for the end of that fiscal year. The EPS forecast consensus, this is from NASDAQ.com, is $29.99 per share of earnings. And then next year, they are expected to decline to $26.93 a share. But after that, you see a rapid acceleration again, back to $31.33 per share for the following fiscal year, and all the way to $39.82 for their fiscal year that ends December of 2028. So you can even see how the forecasts are expecting the earnings power for this company to exist. I think the market will start to price that in before it even happens. So even if this next fiscal year is down in terms of earnings per share, the stock now is already trading at a multiple lower than its 5-year average. And you have the technical breakout on the chart, which may be confirming that the stock is going to trade up from here, but we'll see what happens. I don't like to call bottoms and tops. I do think, though, with a mindset of multiple years out, Elevance Health presents an opportunity, and I am a shareholder. If you found the video helpful or informative at all, please click the like button, subscribe, click the bell to get notifications, and follow me on X at Stock Sale Flyer. And, if you follow me, you'll get to see where I go with this one and how long I have this stock and how it does. So follow along. Thanks, guys. Bye.